Good morning. So is it over? The selling, uh, maybe for the moment. So we look for why did it go down? Why might it stop? And so one of the reasons was interest rates going up, inflation fears. And so we look at the markets. And so we see the 10-year note here, which is the bond prices. You see the topping pattern and the sharp decline that occurred over the last several sessions. And so they've come all the way back down, and maybe they got a little bit further to go. And sometimes these type of moves, just for a flush, they just really make it look bad, go down through the prior lows. And should that happen, I suppose the markets will continue to sell off. It's based on interest rates continuing to go higher. So again, these are the prices, and it's the yields. And you see the prices are way down. The yields haven't pushed all the way back up and up to here yet. So they're coming up into some resistance. They can obviously go higher. And with this type of a spike higher like that, this kind of power move, you can see on the weekly chart, big wide range bar. So when we see those big wide range bars, and we know it's a power move, there is obviously money behind it, institutional money, and they suggest a continuation, which says, this is going to continue to go up. The selling isn't going to be over until we see that stabilize or at least reverse. So is the selling done? Probably not. Maybe for today. We'll see if this stabilizes or begins to reverse. Now, you can see markets are stable here, I think slightly green, but putting that in to what does that mean as far as yesterday? Well, really not a big deal. The ideal scenario with this type of a reversal, which is pretty textbook with a drop like this, getting close to this area, and it did get relatively far. A lot of times it stops at, right at the bottom of what we call minor resistance, stops at the bottom of that, but it pushed up, and then we got that shock type of a bar. So the two equal bar highs, it pops above, comes all the way back down, and the ideal scenario is for it to break this low. Now, that being said, most times after a big range day like that, you get a consolidation type of a day where, traders, institutions kind of like regroup. It's like, hey, this thing went down a lot. It looks bad. It's probably going lower. Not so sure right now. It's on some support. So it stabilizes and things kind of calm down. So we'll see if that's in the cards today. Debbie's up early. Big events today. Dems debit ceiling bill. Yeah, you know what? Those things could be market moving events. I think everybody kind of has their ideas as to, what's going to happen. Eventually, politicians fold, and they do the wrong thing. They're going to piss away the money, and one way or another. So, and we survive it, and eventually, all those things that they're doing are, could be, I think, pretty bad situation. Yellen says we'll be out of money 1018. We've been out of money before. They'll print more money. It's just words and numbers on papers, and really doesn't mean much to them other than, what they can siphon off into wherever they're going to send it offshore somewhere for themselves. I think I'm very, you got my feelings about what they're doing, and I think a lot of people do. I mean, it's just so obvious, the corruption that's going on. It's just too terrible and in our faces today. But little we can do about it other than time comes to vote, get out there. All right, so stabilization day. It's on some support here. Now, You see, it didn't get very far. And sellers show up here again. We've got a weekly bar. We still got several days to go. This closes like this. I mentioned the potential for a measured move lower. Maybe puts it down here. It's unlikely to happen this week. So today's SPX day. So two thoughts. Do you think things can just stay here and stabilize like they normally do, and get somewhat close to this? The premiums are attractive because of the volatility, but the danger is also there as well, because if things should cut loose to the downside, getting too close to the danger could take you out of the game. So, this isn't something to have any level of greed with. It's about taking what should be no-brainer money. It's just never going to go there. And so what I would suggest, if you're going to do this SPX credit spread thing, I looked at this as what could possibly be the worst case scenario. Like it just hits the fan and down it goes another day. And so I just simply looked at yesterday's range and measured it, and I just projected it down. I say, well, that bar, and if it gets a little bigger, could it go? If it was to go that far, where would it end up? And it would end up in an area where there's a prior pivot low, which is good because it's not a projection lower that it's in the middle of nowhere. So 4260 is possible, McGraw. I've got 4250 written down, which is a little bit lower, and it's at that 50 level, which things tend to, but 60 I think is probably doable. Even if it gets close to there, it's very likely to stabilize because that is a very big move in a short amount of time. So I've got written down 4250. Now, if you think it'll stabilize down there, and this market has been, like cat of nine lives coming back from these drops. So to take the risk of the upside, if you want to consider it, 4420, which is not above the high, but so probably don't want to go there. There's huge premiums on the downside, the fear. And when they spike down like that, the premiums pop. So the thing is, don't get greedy, and you say, well, 4,300 is a whole number and it's below the pivot. And man, if it doesn't go there, how much you're going to bank? Well, anything's possible. But if we look at things objectively and say, well, there's support here, it gapped down, it continued to go down, right? It's sitting on the 100 MA. And then if it continues to drop, it's got to get through this pivot low, which it'll stabilize at. And so on. So, some time ago, I kind of used the reference point to the moving training day, with the cops that are stealing. And it's like, you want to go home? And so SPX is not something to take lightly, this trade. So I think I always look at it like from the point of view, it's impossible for it to go there. We know it's possible, but is it probable? Highly unlikely that it's going to fall that far to get down to 4250 today and keep going. All right. All right. So broader markets, S&Ps, I already showed you it's stabilized here, already begin to roll over the 5 minutes in a downtrend. And, might drop down to the next level on the 15. No bounce going on here of any significance. NQs broke down through the low, and the next low is right here. So one of the things you always should be looking at as things begin to drop, and we look to the left and say, well, it's in the downtrend. It's, here was the crack. Here's a sell setup. It should go down here and it should take it out. And then, of course, the next thing is, well, where's the next stopping point, which is, right here in the 100 MA. Just based on this pattern, while it could stabilize, Unless it could retrace all the way back up more than halfway and close more than halfway into this red bar, the assumption is whatever these jiggles that are going around here, it's going lower. And lower to where? Well, usually a pattern like this after stabilization, it goes like down here. And so again, it's step by step. Last week's bottoming tail bars that were evident everywhere with the deep retracement that occurred, they're getting negated. And that's bearish. So when we use bar by bar analysis concept and we say, well, hey, that was a nasty drop, but it's a bottoming tail bar. Can it trade over the high? Well, geez, it did. And now it's at the low. If it looks like this on Friday, give or take a little, that's a measured move scenario, which, it's kind of, well, you just, if I can get the little drawing tool out there. And if we just take the low to there, and that's not even from the high. And that's, almost 5%. And then we take it and go like that. And it's just kind of an idea. Where does it put it? And, it's pretty far down and there's nothing to the left. It doesn't mean it's going there, but a lot of times it's how these patterns play out. Is it time to have a bearish bias overall on this market? Well, Joe, we've been talking about, a bearish seasonal period, right? For already a month and a half. As we got into August, we know things have the tendency to begin to change in August. And then as you get into September, which, was the September high right there. And one of the things I wrote in the letter was, look, we never know the high until after the fact. So here it is. And we do not have a scenario of a recession or some type of a bear market situation. So these interest rates going up, which the inflation concern is obviously a real concern. And but the seasonality is the markets are going down. The markets always need a reason. And as ugly as things look at the low, do we have a situation historically that has created bear markets? And bear markets, you could say 20% down or worse, and it keeps going down. We don't. And in reality, this interest rates going up here that have pushed the market down actually helped to put a floor under the market. So, if we went back and look, this line was down here, like what it was just prior to coronavirus, we got problems to be concerned about. Now, the transports broke down through the 200, right? What we want to see is, if the markets are going to go lower, we want to see some kind of stabilization. So if the market stabilizes and we get the end of year rally, and this thing doesn't rally very much, and the markets can go up while transports are still deteriorating, I think we're going to have a real problem next year. So that's too far off. But right now, I would just say, yeah, short-term bearish bias, just based on the seasonality and what's happening here. There's been no reversal. I mean, that's just common sense. But longer term, we're going to be looking for this thing to bottom out in October and set up a great opportunity for the markets to go up into the end of the year. And, while we're looking for that, we have to see it actually materialize. So the Russell held up, it got clobbered yesterday, but it's in this big trading range. And, ideally, this mess, we'd like to see it continue to be a mess and stay within this trading range and not break down. We don't want to see, this correction evolve into something that things get broken so badly that, kind of like the long-term bullish view begins to deteriorate. Okay. Even things like the mid-cap sector, it's just been chopping around. So it's been a long consolidation of correction of this very bullish move. So rather than correcting down, it's been going sideways, which is a positive, but makes for difficult trading environment. that's all it is right now, Joe. It's a season, it's a seasonal corrective period. Like historically, that happens. It doesn't happen every year. And this year it's happening. So again, we look at the charts, the tea leaves, we look at intermarket analysis and say, you know, which sectors are holding up, which sectors are getting destroyed. We look at the yield curve, and we look at the transports, and we look at all of these information to objectively have a bias as to how bad is the situation. Is it just the seasonal period? And you know what, where we get this correction? But you know, when the markets go down, let's say the markets go down 8-9%. Okay, but you know what? There's going to be individual stocks that are going to be down 20, 30, 40, 50%. And that's the real danger with being in the markets and picking individual stocks. Pick the right one, bull market, you're going to do fabulously well, much better than owning, you know, any spider ETF. But when the correction comes, you're going to wish you in that spider ETF to only be down 9% or whatever it might be. You know, we haven't seen 9% type of correction in quite a while, but I can show you already stocks that are being killed. So everybody talks about the market. Well, that's fine, you know, but you see those individual stocks that are getting decimated, and you know, that's something that you just, yeah, you know, it's your financial money. You don't take it seriously, you're going to learn a very bad lesson. Bitcoin is turning its way down into support. Weekly still looks good. We need to see it start to make the turn. It's at 40,000, a whole number, minor support. Now it's the factory work, waiting for a green bar here. Maybe it's this W and it, you know, it's got work to do here. Oil down today, still bullish, topping tail yesterday. You know, uptrend, bought the dip, maybe $80. Gold churning down. Oh, no one loves gold. Short it, stay away. Silver is already down at support, starting to break it here. So yeah, it couldn't get turned around. You know, that little shock bar there, that was bad news. Upside shakeouts, but it's great if you're thinking short. That's a great pattern. What was it? I can't remember yesterday. We don't have time to go back and look at it, but it wasn't yesterday. I think it was day before yesterday, around mid-morning or so. The S&Ps did something like this, and they spiked up and came all the way back down. That's like, gotcha. You know, short-term breakout against the trend. You're done. So these kind of patterns are very powerful. And what else here? We covered a lot of stuff. Well, internals, not quite there yet. So I don't know how far this will go. We have to see what happens here. But you know, if it spikes down and we can get this put call ratio down here and this year, I mean, into October and all of the seasonality coming together with internals coming together and all the things that we'll look at day to day and week to week up until there. You know, we look for that seasonal great opportunity into the end of the year to profit from. So we'll see how it unfolds. All yours, Dan.
Good morning. Yeah, I'm definitely voting on lower prices. Makes it more confident, like you said, getting the internals there. Better entry, better risk reward. All right, so all our opens are fine. Any questions was asked? Yeah, the Qs this morning were the best of the four horsemen. They were gapping over this prior pivot, which would have set up a nice day trade long. So we'll just play by ear. Let's look at some gappers here. EQT 2060. I think they're doing a secondary offering. No good pattern. Boeing for the Dow 30. This is definitely a standout. Wow, everything else. There's nothing else even, well, Microsoft at the $1.18. Everything else is kind of up marginal. Apple up a little bit. So that's a big gap over yesterday's red bar. That looks good. This is a crazy, I don't know if this is a Reddit toy, but this is a gapping mess. Now down to 14. I have no interest in that unless you're just day trading it. Dollar Tree looks really good. This was a 1, 2, 3, still in a downtrend, but now, well, see the gaps. That's excessive gap now. But let's keep an eye on that to do a put spread. Thomas asking about WOR. Gap in the $60. There's no, we love trading gaps. But and Greg's course has a 7-step process to rate quality. I condense it to 2 steps just for time sake, screening purposes. So I want a compelling gap with a price void, and then put it in a 5-minute window and see how it sets up. That's it. That's simple. The problem with this is it's not even meeting my first prong. It is a bullish gap, but it's excessive and at resistance. So I'm not crazy about that one. Actually, talking about gappers, so yesterday, this coup was actually a compelling bearish gap. See, it's gapping just under support from 2 weeks of consolidation with a price void. And then right when it opened, just bearish all day long. So I'm showing you that to compare, obviously. You're asking about ACB. There's nothing there. I mean, the 2 big green bars on volume. Okay, maybe short-term low. That's a plus, but it's still in a downtrend. Although this is a greater than 100% retracement. I don't know. It could be the start of something, but it's not what I call a tier 1 trade right now. Goldman, we did a call spread yesterday, a short bear call credit spread. Nice sell setup, nasty engulfing at the 20 and the 50. And the reason I'm showing it here is was nice relative weakness, meaning not gapping up even when the markets were huge earlier on. So this actually could be a continuation day trade short. Closing at the bottom of the range, couldn't bounce much. So that's a short idea. Micron here, earnings gapping down 71. It was a little lower earlier, but it's a loved. Well, I don't know if Micron's the loved one in the sector. It's more like AMD and NVIDIA are the most loved ones. But we'll say possible day trade, possible put spread with volatility rising. When I said NVIDIA, I just looked up at my 15-minute charts and noticed that this is a bullish 15-minute. Now, see, I actually thought the Qs were going to do something like this morning, gap right over this pivot, have a bullish pre-market price void. So NVIDIA is actually holding very well relative to the broader markets pulling in. And it's a it's NASDAQ, so we compare it to that. So for a day trade long, we're still fighting a bearish daily. This would be just scalps if they set up. And on my fangs, actually Facebook also has that's a very nice 15-minute chart. So Nvidia and Facebook are two day trade long scalp ideas, and we'll see how they set up. Calm. I think you have maybe earnings. I see one print at 37, but there's no volume. So we will come back to you. EPAC had earnings. Sell. I can't tell where you're gapping, but it's a sell setup. That's a sell setup. You got a downtrend. You got a rally and reversal at resistance. CTOS. CTOS up $1 and change. So if that can't, $1 on a $385 stock is nothing. So this could be a 30-minute low short also. We got two nasty upside shakeouts, closing breakdown. That's what Thomas asked about. Jable. Sell setup had earnings, sell setup reversal, although that's a deep retracement from here to here. That's deep, kind of like 80%. So we would not expect a new low, although this is a bearish gap. So that could be a day trade short idea also. Sherwin. Disappointing earnings on, again, the same story that we've been hearing: supply chain, inflation, labor. So, same old story we're hearing everywhere. United I read in the paper, they're going to fire like 600 people who don't want to get a vaccine. And then I've read another article that said in New York, they passed, I forget what group, but some big old hospital group is doing that also, requiring vaccines. And now, we're going to see, that's going to be a good test case across the country, in my opinion, of, Biden's going after all companies with over 100 employees, but you start going after hospitals, and there's going to be a time, I can promise you, and it could be next week in New York. There's going to be a time where they say, well, we're overloaded and, we can't take care of sick people because now we don't have enough workers because you fired them. So we'll see how that turns out. All right, that's a big gap. Gap's too big for me. Look at this, Dollar Tree is moving. LCID, electric car. Okay, that's a nice gap right over a red bar. I'm gonna get rid of Micron. I'm gonna put LCID here. So let's see how it sets up. Like I said, compelling gap with a price void, and put it on a 2 or 5 minute chart. Agree, this recent IPO has been unloved. Today is a big shock gap. I have no idea what's causing it. Oh, so the gap has nothing to do. Yeah, but it's a recent IPO. Oh. Okay, so you're saying new price target 78. Well, that was a powerful upgrade. One thing I like though is that they're giving it an upgrade after it's oversold, instead of the thing rallying from $25 to $60 and then giving it an upgrade. So that's a bullish gap. That's a bullish gap right there. I'm gonna put that in another window. This clean CLNE, I'm glad we avoided that. That's taken out yesterday's low. All right, this Dollar Tree gap's too big. No, we aren't going to get anything for puts way down there. Boeing I mentioned. Let's keep an eye on that. Look at Michael Jackson, the marijuana sector. That is, look, every time you think that it might be getting a bid, it keeps disappointing. Disappointment after disappointment. Yeah, you're right, Manuel. Sloppy, it started yesterday, also looking fantastic. But, with the sell-off, it caused a lot of damage across the board. All right, Facebook, remember I mentioned Facebook day trade. That's a great 15-minute pattern using the pre-market. Roku I see popping here, but I don't like that 15-minute pattern. I see Zoom popping. NVIDIA I mentioned. Actually, maybe 10-minute high. It's 933, so just let it. So spiders here, it's a bullish gap, but retracement concepts, right? That's, it's only 25%, 30% gap. So that's not negating the bearishness yet. Apple, if Apple closes like this, it looks like a short under yesterday's low. It's not a bear 1, 2, 3 because of the tail, but I interpret it the same. Yeah, Emmanuel, I'm just not brave enough to do that right now with the broader markets. Not me. But let's see how it closes. The IWM selling off. Not me. I'm no longs for me yet. Oh shoot, our solo is selling off too. Shoot. We have a covered call on this. LVS I was watching yesterday, and that I couldn't get. Today's Wednesday, couldn't get over Monday's high. A Goldman low alarm. I mentioned this could be a day trade short. I like the little upside shakeout here on the 15. Coup. I would kill it on a bounce. It's harder when you miss the easy entry or exit entry, same difference. All right, our Hawaiian airline is pulling in here. We have a covered call. The problem with rolling something that's deep in the money